Okay, now we're going to hit our favorite Russell 2000 Index ETF, the IWM, which would be a great visualization, this particular chart on what's happening in the US Small Cap Index. I'll put together a RUT, the actual index chart, on my TOS platform later on today when I cover a bunch of stocks. This is for all the afternoon viewers who would like to catch up a little bit on the markets. I will do all the stocks and stuff a bit later on a different platform. So saying all that, let's take a look at what's happening with the U.S. Small Cap Index here, which seems to be, one of the most disliked indices out there right now, at least from the pundits who basically are warning the world never to touch the Russell 2000 Index, which they did here, and numerous times when we had pullbacks. So that's where my word comes in: self-loathing, no belief in the power of the U.S. small business to rejuvenate itself. Saying all that, the valuations tend to be higher on this, so there are more margin on the Russell 2000, and of course companies, I should say, by retail institutional traders, and they tend to get blasted out when we have pullbacks. That's the reason why it's so volatile, and that's where the money's made. So saying all that, what we have here is a daily chart. I'm showing this as clean as possible. Same story. I have the pivots. Okay, I have the pivots here. The greens being the lower, 108.50. We have 108.80, 109.84, where we're bounced off. And then of course we have the green ones, which are the upper things. So just squint your eye, get a magnifying glass, get a bigger screen, high resolution screen, and look at all this stuff. All right, this is the 34 curling down, still hasn't curled below the 50, which is the red line here. This dotted line is the 34 moving average. By now you're getting a feel that how I give a lot of credence to this 34-50 lines. And again, if this is going to be a move like this down, then we obviously have room to fall, and that would be at the 61.8 retracement level, which would be around the 107.50. Strong support at this level. It's a triple bottom, almost a quadruple one. Let me get my little squiggly drawing thing. Here's one, here's two, could be three here, which would be great. And here's four. And every single time we had every single Mayan warrior and dogmatic bears come out and say it was all over. Let's see when it's all over. This is the 50. This is the 50-day moving average right here. I'm sorry, 50% retracement level, 104. I believe it gets there. I just don't think it happens now. Or if it does happen right now, it would be a great buying opportunity. Those are very sharp drops here. The 50, we blew below the thing, below the 78 fib, 78.6% retracement, 78 retracement level. This one is a 61.8, so it's right here. So they'll kind of match up. Now, here's the interesting part. What we're seeing here is deep oversold conditions, which we know. Okay, and generally a bounce comes about from these levels. Touches that. So what's the bounce from here? It would be closing the gap at around 113.68. That's still serious, decent sum of money on the upside right here, and one has to be quick. So you have to, keep that in mind. This also happens to coincide with the if it fails at the upper end of this falling wedge, upper arm of this falling wedge. Not too difficult to understand. So those would be the upside targets right now. If we hit the 34, which would be 115.85, then hardcore shorts are going to start getting worried, because in that case this would become a head. This level would become a right shoulder, this being the left shoulder, and then we would basically move up and test at least the upper end of this Bollinger, which is 117.60. It doesn't do it in a straight line from what we have seen clearly, but again, we have some room to move up, and if that happens, it's going to be fantastic. If it fails here, then it's going to come back and retest down here. Okay, pure technical stuff and what I've seen happen before. So let's get all the squigglies out. So we have a bullish falling wedge, possibly bullish, we don't know yet. And if this moves up, then we're going to move up through this line and then test the 34 at 116. And that reclaims back the rising 34.50 crossover that happened here. If that happens, that's bullish. If this completely turns below the 34, crosses over the 50, and it does this type of thing, then we'll have, then we'll have a very bad August. But of course, it's going to zigzag around. So by you buying puts or shorting or shorting is not going to work immediately. It's going to certainly throw you off the boat on that side too, like it did with me on Priceline on Friday. Put the short on Priceline, looked great for about a 5-point drop, and it didn't. Went up. So those type of things have to be kept in mind. Unless you want to buy some shorts and unless you want to buy some puts and don't look at it for the next 4 weeks, well, that's a different story. I wouldn't advise on that. Saying all that, I'm watching this very carefully as to resolution of this falling wedge as to which way it goes. Remember, confirmations are no longer confirmations. Breakdowns are no longer breakdowns. This has been going on for a while, but no one seems to believe it. This was a massive breakdown. Look what happened. This was a big breakdown here. Look what happened. So we'll wait to see what happens with this. So even if it breaks below this, we certainly have the 50 in play, but don't assume that all of a sudden we're in some intense bear market. That's what I'm trying to teach my members. Let's take a look at the 60. And this is interesting. I will try to redraw this properly. Okay. So I could draw it. Yeah, I'll draw it like this. This is good. And try to get some visualization on this here. Now again, a lot of time my funky crayon drawings and stuff, they won't make sense to a very traditional, orthodox, technical analyst. But again, I don't really care because it's worked for me over the years. So saying all that, let me put together my bingo. Bear with me 1 second, get these right. It's tough to work when it's a Java platform here. Everything's like slow. Okay, so this is what we're seeing. These are the pivot lines, the red and the greens. This is these light gray lines are Fibonacci retracement. Let's do one thing at a time. Let's do the fibs here. The fibs are telling me we do have if we want to hit the May low, then we are looking at we're looking at around 108.20, which would be great. Feel very ugly though, so it might be a nice short to do that. If it fails here dramatically, first part of next week, Monday or Tuesday, then we're going to go and test this, which would basically be a terrific buying opportunity. In the meantime, we are bouncing off this pivot here at 109.80. We have a lower Bollinger here at 109.26. And if you notice, we have a positive divergence in play here. Look at this on the stochastics. So what am I looking for? Here are the pivot levels. You can monitor it yourself. Let me do this here. Let me put some numbers, show prices. Okay, there are the prices. So you just, walk it through. 23 is 111.14. The 38 is 112.93. And the 50 is 114.44. So let's look at some, I have a minute here on my time allotment. So here we are. Look at this. This was back in June. And we could very well be doing the bull case scenario would be we take out the 34 here and we go over this falling wedge and we hit 114.38, which is the upper Bollinger. So and that would also be the 50. That would also be the 50 fib retracement. If that blows through that, then we go back to original number, which is around 116. Is it possible that this is a is it possible that this pattern repeats itself? Let me try to draw this properly. I'm running out of time. Very possible. Downsides are all here. Positive divergence going on here. So I'd be looking at 114.45. Read the numbers, but watch this falling wedge here. If that breaks out, all bets are off. And again, we have a very minor